Welcome back to Investing Talk Podcast.
Today we're looking at Novo Nordisk. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of Novo Nordisk. Ticker NVO, based on our sources. What jumps out right away is, well, the sheer boldness from the analyst community.
Boldness? How so?
Well, the sentiment is just overwhelmingly bullish. I mean, our sources are rating this a 9 out of 10 thesis overall. Pretty strong.
Okay, 9 out of 10. And looking at the numbers, the stock closed recently at, what, $51.37?
That's right, $51.37 as of October 31st. But here's the kicker. The consensus analyst target isn't just a little higher.
No,
the average target is sitting at $80.40.
$80.40. That's
Okay.
let me do the math. Over 60% upside potential.
Exactly, 60.67% to be precise. And that's the big number we really need to unpack today. Is that justified?
Right. Because Novo Nordisk isn't some small startup. It's a pharma giant already leading in its field with, some incredibly important drug platforms.
Precisely. So for analysts to think it still has that kind of runway left, well, the fundamentals must be solid. And the upcoming catalysts have to be pretty significant.
And it seems like the signals from analysts are getting stronger, too. The data shows 10 analyst upgrades just in the last 90 days.
10 upgrades.
When you see that kind of cluster of upgrades, what's that telling you?
It usually means the company's trajectory, its fundamental performance, has shifted upwards faster than people expected.
So better than anticipated results.
Yeah, typically when you see that many upgrades close together, it signals that the recent quarterly numbers didn't just meet expectations, they probably crushed them. They're delivering growth that's forcing Wall Street analysts to revise their models upwards, essentially playing catch-up.
Okay, so let's unpack the why behind that premium valuation, looking at the financials. Wow, these almost look more like a tech company than traditional pharma.
They really do. Trailing 12 months revenue is $49.11 billion, and the net income, $17.49 billion.
That ratio between the two is pretty striking.
It is. That net margin, the actual profit they keep after everything, is staggering. It's around 35.6%.
35.6%. Just to clarify for listeners, how does that compare?
Well, put it this way. Typical large pharma margins might be, say, 15% to maybe 25% on a good day. Novo Nordisk is just operating on another level of profitability.
Okay, wow. So what does that incredible margin tell us about their business, their competitive strength?
It screams competitive moat. It's largely driven by their proprietary GLP-1 therapies.
GLP-1, that's the glucagon-like peptide-1, the drugs making waves in diabetes and obesity.
Exactly. They're revolutionizing treatment in those massive markets. And it's not just the drug's effectiveness. It's also about the sheer scale needed to make these complex drugs.
Manufacturing scale.
Yes, the scale required to produce these injectables, or even the newer oral versions at the volume the world is demanding now.
Yeah.
That scale acts as a huge barrier to entry for smaller competitors and gives Novo Nordisk, frankly, exceptional pricing power. That flows right down to that massive margin.
But hang on, isn't a 35% net margin like painting a giant target on your back? Especially with competitors like, say, Eli Lilly really ramping up their own offerings. How sustainable is that?
That's the multi-billion-dollar question, isn't it? And it's why we need to be a bit skeptical, or at least watchful. The sources suggest management is very aware of this.
How are they defending it?
Their strategy seems to be relentless reinvestment in R&D. They're pushing hard on next-gen delivery methods. Think moving from injections to pills and exploring new applications for their drugs. Essentially, they're trying to innovate faster than competitors can catch up, moving the goalposts constantly.
Got it. So beyond just the profits, what about the overall financial health, the balance sheet?
It looks purpose-built for resilience. The sources highlight strong liquidity, plenty of cash, and relatively low debt levels.
And that means lots of free cash flow, or FCF.
Exactly. Huge amounts of FCF. This means they aren't really dependent on borrowing money for big strategic moves or even just running the business day to day.
That financial freedom must be key.
It's absolutely crucial. They can fund massive clinical trials. They can make major acquisitions like Acaro without needing to issue more stock and dilute existing shareholders. And they use that cash really effectively.
How can we tell?
Look at their return on equity, the ROE. It's consistently high, which shows management is really good at reinvesting those profits into areas that generate even more growth. They don't just sit on the cash, they put it to work smartly. It feeds that whole cycle of success.
Okay, that makes sense. Now, let's talk risk. If the market gets choppy or we hit a recession, how does a stock valued this highly hold up? Does it offer any protection?
Well, this is where a metric that sometimes gets overlooked becomes really interesting. Beta. Novo Nordisk has a surprisingly low beta.
Low beta. What is it?
It's 0.33.
0.33. For listeners not familiar, what does that number actually mean in practice?
Okay, so a beta of 1.0 means a stock tends to move perfectly in line with the overall market. A beta below 1 means it's less volatile.
So 0.33 means?
It means NVO is historically only about 33% as volatile as the broader market index. So if the market tanks, say 10%, NVO might only drop around 3.3% based on past behavior.
That's quite defensive for a high-growth stock.
It really is. You're getting the defensive characteristics you might expect from a stable consumer goods company, but combined with the growth story of a leading biotech. It's an unusual and, frankly, very attractive mix, especially if you're worried about market volatility.
Interesting combination. Okay, let's shift gears to the technicals, the charts. Fundamentals look strong, but is the price action reflecting that?
Yeah, the technical indicators largely back up the bullish case, especially if you look at the last, say, 3 months.
What are you seeing?
A clear upward trend. You see those higher lows and higher highs. That pattern signals consistent buying pressure, consistent demand for the stock.
And the current price, that $51.37, where does that sit in its recent history?
Well, what's interesting is the 52-week range. It's pretty wide. The low is down at $45.05, and the high was way up at $113.76.
Wow, that's a huge range.
It is. So being at $51.37, relatively closer to the bottom end of that big historical range, well, it could suggest that for new investors, maybe the market is offering a potential entry point, a chance for a rebound.
Assuming the trend holds.
Exactly.
Yeah.
And momentum indicators seem to confirm the health of that trend. The stock is consistently trading above both its 50-day and its 200-day moving averages.
Which means?
It suggests this isn't just a quick bounce on some news headline. It looks more like stable, longer-term accumulation by investors, which is generally what you want to see in a healthy, sustained uptrend.
Okay, so fundamental strong, technical supportive. Now let's look ahead. What's driving the future growth? The catalysts.
Novo Nordisk has been busy lately. Incredibly busy. Looking back over the last 3 months, 2 things really stand out.
What were they?
First, back in August, they released really strong first half 2025 results. That confirmed that the acceleration in sales of their GLP-1 drugs wasn't slowing down. But the really big strategic move, that happened on October 9th.
Ah, the Akero Therapeutics acquisition.
Exactly, the Akero deal.
We should probably talk about why that matters. I mean, why buy Akero when they're already dominating the current GLP-1 market? What's the strategy?
Good question. It looks like a strategic hedge, really.
Yeah.
A way to avoid being too reliant on just the current GLP-1 drugs, amazing as they are.
Diversification.
Yes, diversification into related but distinct areas. Akero focuses on cardiovascular and metabolic diseases, specifically NASH.
NASH. Non-alcoholic steatohepatitis. The liver disease.
That's the one. It's a rapidly growing health problem with huge unmet medical need. This acquisition brings a promising late-stage drug candidate into Novo's pipeline, targeting something outside their current core focus.
So it's about broadening the future revenue base, thinking long-term.
Precisely. It's about building future revenue streams before potential competition or, eventual patent expirations might start to slow down the current growth engine years from now. It shows real foresight and a willingness to deploy that cash aggressively.
That Akero deal makes the near-term calendar even more interesting then. There are some key dates coming up very soon, right?
Absolutely critical dates. The biggest one right around the corner is the Q3 2025 earnings release. That's scheduled for November 5th.
November 5th. And given everything we've said about upgrades and sales momentum, expectations must be high.
Very high. The market widely anticipates another beat versus the consensus estimates. If they deliver even a modest beat on November 5th, that could easily spark the next leg up in the share price and really solidify that bullish thesis.
And then just after that, November 14th, there's an extraordinary general meeting, an EGM. These can sometimes be quite procedural, but is there more expected here?
There's definitely some buzz around this one. The market speculation is pretty active. It could be about anything from accelerating the Akero integration to maybe changes in their shareholder structure.
Or maybe something with the cash. Dividends.
That's certainly possible.
Yeah.
Given the huge free cash flow we talked about, they could potentially announce a special dividend or a dividend increase. It's a date that adds a bit of speculative upside pressure, even if the main agenda is just governance.
Okay. And then looking out to December?
December often brings institutional activity that can move stocks. You've got
Sure.
the big index providers doing their ETF and index rebalancing.
And NVO might see more buying because of that.
It's highly likely.
Yeah.
Given its performance, its stability, its sheer size now, NVO will probably get a higher weighting in major global health and growth indices. That forces passive funds, the index trackers, to buy potentially millions of shares, creates reliable demand.
Plus year-end adjustments by active managers.
Right. Active fund managers often like to window dress their portfolios at year-end, maybe adding strong performers like NVO that fit that defensive growth profile. So December could see significant fund flows.
We should also touch on the rumors, the speculative stuff that's out there. What's the chatter?
Well, the most persistent buzz is around potentially accelerated FDA approvals for more uses of their GLP-1 drugs.
Expanding the indications beyond just diabetes and obesity.
Exactly. Imagine getting the green light to use Wegovy or Ozempic for, say, preventing specific cardiovascular events in high-risk patients, or maybe even certain neurological conditions. That could unlock billions in new market potential much faster than currently modeled.
Any other rumors? More acquisitions, perhaps, after Akero?
Oh yeah, that hasn't died down. Management clearly has the cash and the strategic focus to do more deals. The rumors suggest they might be looking for smaller, bolt-on acquisitions, perhaps targeting other metabolic disease treatments or maybe rare disease pipelines that fit well with their existing platform.
And confirmation of another deal would likely boost the stock.
Almost certainly. It would be seen as additive to long-term growth, showing they're still aggressively building for the future.
Okay, so it's an incredible story. Growth, financial muscle, multiple catalysts lining up. But let's bring in some balance. That 60% upside target implies near perfect execution. What are the major risks here?
The number one risk, without a doubt, is competition.
From Eli Lilly, mainly.
Primarily, yes. While Novo Nordisk really pioneered this GLP-1 category, Lilly is a very strong competitor with compelling drugs and data of their own. The fight will be over efficacy, how convenient the drugs are to take, and increasingly, price. The price competition could eventually put pressure on NVO's amazing 35% margin as the market gets more crowded.
And what about the classic pharma risks? Patents running out, regulatory hurdles.
Always huge factors. Those key patents protecting their current blockbusters won't last forever. Management absolutely has to keep the R&D pipeline full, delivering the next generation therapies before the current ones face cheap, generic competition. That's crucial.
And regulatory risk.
Always present. An unexpected rejection from the FDA, or even just a delay in getting approval for a new use, can hit the stock hard. It's just part of the game for any big drug company under intense scrutiny.
But the sources also suggested management has ways to mitigate these risks, right? They're not just sitting duck.
No, definitely not. It comes back to how they use that free cash flow and their strong R&D engine. They spend heavily to try and extend patent life, maybe through new formulations or combining drugs. They're constantly pushing to get approval for new indications.
And the Akero deal fits here too.
Absolutely. Buying Akero, moving into NASH, that's a powerful way to diversify. It spreads the risks so they aren't totally dependent on just the current GLP-1s.
Right.
It limits the damage if any single drug faces a setback.
Right. So it's about using today's strength to actively manage tomorrow's known risks.
Exactly. They're leveraging their current massive success to build the next layer of their competitive defense.
Okay, so let's try and synthesize all of this. We've got market dominance, incredible margins, low debt, a stack of upcoming catalysts, but also real competition and risks. What's the bottom line here, thinking about different investment time horizons?
Well, for a shorter-term investor, the setup looks pretty compelling heading right into that November 5th earnings report.
Because of the expectation of a beat.
Yeah, the expectation for a beat is quite high. If they deliver on that, you could see the technicals respond very positively and push the stock higher pretty quickly.
And for someone thinking longer term, years, not months.
For the long haul, the structural case is still really strong. It looks like a solid candidate for steady growth and compounding returns over several years.
Driven by the underlying health trends.
Exactly. The global need for better diabetes and obesity treatments isn't going away. It's a multi-decade trend. Novo Nordisk's leadership position and that deep competitive moat give them a lasting advantage that's hard for competitors to overcome.
So, to wrap it up, the market is placing a big bet I bet that Novo Nordisk can keep up this almost unprecedented level of performance, successfully integrate Acro, and keep the R&D pipeline firing to justify that huge 60% potential upside analysts see. The real question for you, the listener, is probably this. How much of that amazing story is already reflected in today's stock price? And what new breakthroughs, beyond the current GLP-1 success, will they need to actually hit and maybe even surpass that $80 target? Continued flawless execution seems to be the key.